Hey everybody, it's Ricardo Gorski, the founder of Tax.One, where we help individuals and businesses pay as little tax as legally possible. And in this video, we are going to discuss the citizenship-based taxation and why I think that this is actually quite possible in the near future, especially in Europe. And for that, I wanted to talk a little bit about my story because I actually left Germany in 2018 already, after running a German GmbH and also a sole proprietorship with basically some business partners of mine. It's called an Einzelunternehmen in Germany. And there we paid 40%, actually more than that, in taxes. And back then, just because I was quite young, I didn't really realize it yet, what this actually means, especially further on when you scale your business. However, when we then traveled a bit, we went to Bali for half a year, we lived in Switzerland with one of our biggest clients back then. Then we decided that we actually want to relocate to a low tax jurisdiction. And first of all, this wasn't really for taxes per se. We just wanted to have a better lifestyle. We wanted to make international contacts and relationships. So we relocated to Cyprus in 2019. And this actually meant that I now have a new tax residency plus a Cyprus limited company. And both of these levels were drastically less taxes than in Germany, meaning on a personal level, my dividend tax was completely exempt because a non-domiciled individual in Cyprus does not pay any taxes on the dividend income for the next 17 years. There is a 2.65% healthcare contribution, but this is capped at 4,700 euros. So if you make a lot of money, you don't even notice it. And the corporate tax of my Cyprus limited company was 12.5%, which lowered my total tax rate from 40-something% down to just 15% with the healthcare contribution, which is a drastic change coming from Germany. And then I realized, all right, that is quite interesting, not just for me and my business partners, but also for so many other entrepreneurs, business owners, investors, even retired people, families that just seek for a new life in a better country with a better tax policy. And actually, why this is possible is because of the residence-based taxation system that we have in the European Union. Meaning, in the EU, you pay taxes where you live. Back then, I was a tax resident of Germany, so I was liable for German taxes, but now I'm a resident of Cyprus, so I'm liable for Cyprus taxes, which are much more favorable than the German ones. And the good thing is that most countries in the EU, actually all of them, have a double tax treaty between each other, meaning the DTT actually save you from double taxation, because what's also possible is that Germany would now look at Ricardo, me, and see that I'm living my best life here in Cyprus. So hey, we also want some money because he was born and raised in Germany. He used our infrastructure, our public services. He went to school for free, but the double tax treaty saves me. So this as a little introduction for the citizenship-based taxation, it's important to understand that we actually have a residence-based taxation system at the moment, but it doesn't say that Germany cannot make any money off me, even now that I relocated. So let's start with the fact that we are currently witnessing the largest wealth migration in modern history. I'm just an example of a young entrepreneur that is leaving the Central European countries, Germany, and there are so many others that are leaving and doing the same. Here we have an article from Forbes. The actual source is actually Henley & Partners, who do an amazing job when it comes to statistics for wealth migration. So basically citizen outflow and citizen inflow, where most of the millionaires are leaving and traveling and relocating to. And here we see a constant uptrend from 2013 to 2026, which is a prediction of the number of millionaires that are migrating. So we see in 2013, so just about a decade ago, we had 50,000, 51,000 millionaires leaving or migrating. Now, this year, we are expecting 3 times that number. So this actually shows the trend that more and more millionaires are migrating. And here we see a visual explanation for that as well. We see countries like the UK losing almost 10,000 millionaires in 2024, which is insane because it took the British Empire centuries to attract wealthy individuals from all over the world, and now they are basically losing so many of them in an instant, just because of a few factors that I will discuss in a minute as well. Then we have obviously China, India, we have some third world countries as well. And then the clear winners are the UAE, America, Canada, Switzerland, Portugal, which attracts a lot of crypto millionaires, Italy, Greece. They obviously also have their own PR benefits, PR incentives, tax incentives. Singapore, big on the list. Australia, big on the list for, again, lifestyle and tax incentives. And why am I talking about all of that? It is important to understand that because this is the fundamental information for the citizenship-based taxation, which I will discuss in a second. Now, these countries here are the countries that most of our clients are from at Tax.One. Most of the viewers on this channel are from where I'm from. I'm from Germany originally. We have a lot of clients from Sweden, Spain, France, the UK, a lot of people from the UK, Norway, and the Netherlands. All of these jurisdictions here, why I would be very careful if I'm from there is because they have very strict tax authorities. And this is quite interesting because these countries already, even though there is no citizenship-based taxation in place yet, they rolled out over the last few years the exit taxes. Spain, Germany, for example. Tax residency delays. Norway, Sweden, for example. The UK even, with some special residency tests where you cannot lose your tax residency from your home country if you're leaving this tax calendar year. You have to wait 2-3 years, still be liable in your home country, and just then they will test your residency again if your economic and social ties are completely cut from your home country, and just then maybe you're not a tax resident in their eyes anymore. This beautifully leads to the next point, the extended residency rules, and the UK specifically with the MHRC and thousands of new compliance officers being hired. They have the resources to do residency tests. We have one client right now, even after relocating, after leaving the UK, he's still considered a UK tax resident. That leads to audits and investigations by these countries here specifically because they obviously don't like that their wealthy citizens are leaving. We see here wealthy expats are targets. And in this letter here from a client of ours, we see that banks are reporting to jurisdictions that are part of the CRS where they see your tax residency. No matter what you claim, the banks and the tax authorities have the last word. And all of those things here where they already try to make money of you is just now even without the CBT, the citizenship-based taxation. That leads to the clear standpoint from these countries where they want to tax the rich. So in my eyes and in many others, there will be in the near future some sort of worldwide income tax or citizenship-based taxation, whatever you want to call it. The question now is obviously to what extent will it be similar to the US? They already have a citizenship-based taxation system which is quite strong, 15% from all Americans flat, something around that, for many years. But in my eyes, it will be quite challenging to implement a similar system. Why? Because the enforcement is quite costly. We need an infrastructure for that. It is important to track assets and foreign income of all citizens living abroad. How will they implement that? I'm not saying it's impossible. I'm saying it is hard. Also, double tax treaties need to be rearranged, changed, renegotiated with all the countries because, as we learned earlier, at the moment we have a residence-based taxation system. With a citizenship-based taxation system, this would fundamentally change. But there are already examples out there that this is possible. I mean, it's as simple as just changing the law, isn't it? A prime example here, which also connects to so many wealthy individuals leaving the UK, is the UK non-dom reform, which was implemented in 2025. We see here an article by Bloomberg where we see that the UK non-dom exits seen are increasing. We have 26 non-domiciled individuals leaving the UK just in 2024, which beautifully confirms what we said earlier. The non-dom status was a smart way to attract wealthy individuals from countries like India, China, where wealthy families from those countries relocated to London, whatever, to have to find a new life there. Anyway, the main point here is how easy a law can change, which was in effect for so many decades. Then we also have Eritrea and Myanmar, which tried to implement a citizenship-based taxation system. I think Eritrea still has it with a flat 2% diaspora fee. This is what they call it, where every citizen leaving the country has to still contribute to the country. But those countries have a lot of difficulties in actually tracking their expats. And then lastly, one can claim, all right, even if all of those things here are implemented, there is still the option of renunciation, where someone can just renounce their citizenship. And then all of those enforcements are useless anyway. This leads to the fact that the US is the only country which successfully has implemented the citizenship-based taxation system. And that is due to their resources, power, and influence, and their infrastructure via FATCA and IRS. This is a huge point why the US successfully tracks all of their citizens all around their world, because they have everyone forced to report to the IRS via bank forms, etc. Every citizen has to fill out an extra form. If you open a new bank account, you see that they ask if you're a US citizen, and all of the banks and many brokers and other service providers and payment providers, etc., all of them call the US and say, hey, here is this individual, they have such and such amount of cash flow and money and assets, whatever it is. So the US knows about all of their citizens, where they are, what money they have, and then they just withhold a certain percentage from their income and wealth. In the US, you are taxed for being American, not for living in America, which is fundamentally different to the residence-based system that we have here in the EU. And this system exists for over 160 plus years, which is quite interesting. And even though there are many parties who claim that they want to end double taxation, which it effectively is, and they also want to cut the taxes for expats, which is basically the citizenship-based taxation, in certain eyes, this is, in my eyes, not going to happen. Actually, the opposite. The EU is watching where we are right now, or most of the people watching this video, because I don't assume you're an American citizen watching this video. And here in Europe, we already have France talking about the targeted universal tax, which is basically just a different term for a citizenship-based taxation system. We obviously don't do CBT, we do targeted universal tax. And what they want to do is they want to test the reaction of the masses. What do individuals and businesses say if we just put out the idea of a targeted universal tax, a worldwide income tax? And even though it sounds like, we are never going to do it, remember lockdowns. Remember when they said that no, vaccinations will never be mandatory, and just a few weeks or months down the line, it was mandatory. Vaccine passports and whatever there was. Crazy times. Anyway, quietly, the EU is also implementing and building the infrastructure for an enforcement mechanism similar to the US. We have Common Reporting Standard, the CRS, we have UBO, we have Transparency Register, which is basically the reason why you can look up every ultimate beneficial owner of every entity in the EU, especially companies. It's just as simple as a quick Google research, and you can just find out so much information about individuals and businesses in the EU. There are literally websites where you can find whole tax audits of individuals with their personal address, where they live. And this is also one of the reasons why a wealthy Swedish citizen relocated to Cyprus and opened up a Cyprus International Trust, because with this setup, he has much more privacy and discretion. He's a public person, and he obviously doesn't want to know the public where he lives and where all of his cars park, etc. Then we also have the EU Digital ID Framework, which is basically the EU DI wallet. This is what they call it, where they have the digital euro, CBDCs, and everything connected on a blockchain, everything digital, super modern, which sounds interesting, but most people don't realize that this might be used against you. Even though they want to market it as cool, modern, and fancy, the reality is this can and will be used against you. Also, the TIN is and will be connected to that very strongly, because it's the tax identification number of every individual. Here we see two more articles about the French Finance Committee approving the targeted universal tax. Here we have the committee again adopting a bill aiming to introduce the citizenship-based taxation. crazy news. And so all of this leads to the fact that with the digital euro, or CBDC, whatever you want to call it, authorities can track your spendings, income and expenses, block transactions if they would want to, because you have a police fine and you owe 50, 100 euros, they can just take it from your digital wallet. And then also they can just enforce taxes directly. If they have control over your wallet, which they will for sure, they can just deduct the withholding tax without you being able to do anything. With cash, that is not possible. But before I sound too crazy, all of that obviously depends on the exact laws and rules. Don't get me too wrong, I don't want to sound too pessimistic and dystopian. I'm not saying that it will be a 15% flat tax as in the US. Probably not. My guess is that first a country will implement a light version of the universal targeted tax. Probably it will be France. They won't call it citizenship-based taxation. They will maybe just implement it in specific jurisdictions. What do I mean by that? I mean with that they will maybe have a white list, a black list. If you move to a low tax jurisdiction or maybe even a tax haven, then specific worldwide taxes will apply. If you're moving to another country of the flags that I showed you earlier, another high tax jurisdiction, Germany, Spain, France, whatever it is, where the taxes are similar, then maybe there won't even be a citizenship-based taxation because you're not evading taxes, you're just changing your life center, your country for personal reasons, for example. And a specific buzzword here is arm's length. This term is also used in transfer pricing rules, which is crucial when it comes to invoicing companies with the same UBO. Let's say I have a company here in Cyprus and I have a company in the BVI where there is 0% corporate tax. So for me, it would make sense technically to declare as much profits as possible in the BVI or Hong Kong or any other tax haven basically, because there is 0% corporate tax, right? So I can just issue an invoice with consulting services from my BVI company to my Cyprus company and get rid of all the profits. But this is where it's not possible anymore because we need to make a transfer pricing study where it needs to be identified whether or not this expense is at an arm's length, if it's basically justifiable or it's just for pure tax evasion. Anyway, I don't want to go too much into details. All of those topics, as you see, can be explained so much further in detail. So if you enjoy those videos, definitely make sure to subscribe and I will talk about those topics in other videos. Let's get back to the main point, the citizenship-based taxation. And I'm telling you, they will rationalize it. They will find reasons to justify it where they will say, no, it's not a citizenship-based taxation. It's just for X, Y, and Z. And whatever this X, Y, and Z will be, they will find certain formulas and rules and all of those things which will come over a period of time. And by 2030, more EU countries could and will probably adopt this targeted universal tax so that more and more citizens in the EU are basically a victim of that, so to say. And if it's not direct, if it's not as flat as 15% in the EU, then it will be indirect. And just recently I talked to a Tax.One client and he told me that he's currently not able to renew his passport because the Lukashenko regime is not sending out new passports to expats, which is crazy and shows me how much control the government has over us. And especially wealthy individuals should definitely have a plan B in place. And even though it sounds dystopian, yes, I agree, we already have so many dystopian mechanisms in place, like the harder residency tests, exit taxes, tax on unrealized gains, which is the craziest thing ever. The German exit tax doesn't even make sense because it is based on a formula which then drains the liquidity, which most entrepreneurs and businesses don't even have because they have a cash flow business which relies on their liquidity. So it is like an indirect block where so many entrepreneurs can't even leave Germany anymore. Then we have the tax residency delays, as I explained earlier. We have manual investigations where wealthy citizens abroad are still being investigated with open tax audits, and even retroactively they are checking your previous tax calendar years, etc., etc. We have constant attacks on the rich and those who leave. We have wealth taxes in certain countries. Here we see a graph of countries in the EU which have a wealth tax of some sort, and then we also probably soon will see some sort of the CBT, because all of the already in place mechanisms would sound as crazy as the citizenship-based taxation if it wouldn't be reality already. So this leads to the final question: what should you do if you're a wealthy citizen from the EU, from the UK, from a country where you fear that they might introduce a worldwide income tax, a citizenship-based taxation? And the first thing I would ask myself is, what even is your citizenship? Because as I explained earlier, there are certain jurisdictions which just have a much more strict fiscus, as we say in Germany. And there are other jurisdictions where the tax authorities are not that strict because they don't have the resources to audit and track their foreigners abroad and all that. So it starts with your individual citizenship. And then the next question is, do you have a dual citizenship? Are you eligible for a new passport by descent, by naturalization, by marriage, by merit, by investment? All of those are ways where a citizen can apply for a new citizenship/passport, which then makes a renunciation much easier if you have a second passport. For me personally, for example, I have a German citizenship, but I'm also eligible for the Polish citizenship, and Poland, for example, and other Slavic countries will most likely not implement a citizenship-based taxation. I'm much more worried about my German part. So by descent, I can get the Polish citizenship. By marriage and naturalization, which goes hand in hand most of the times, I'm eligible for Irish and British citizenship, which is not really something I want to do at the moment, but it's nice to have in the back of my mind. Merit, maybe in Cyprus, who knows? I will definitely update you on that. And by investment, there are Caribbean options where I can just buy a passport. We have Nauru, Vanuatu, we have St. Kitts and Nevis, which is super popular, St. Lucia, Grenada, so many options for citizenship by investment. Tax.One also assists with that. Just go to Tax.One and you can fill out our form for citizenship by investment. And as long as we have these options over here, the next question is crucial, and that is, what is your risk appetite? Because I wrote down back taxes and I already mentioned it. The worst case scenario would be if certain countries implement a citizenship-based taxation and they also write the law so that individuals that relocated years back are still liable for the taxes for previous tax calendar years. This would be the worst case scenario. I'm not saying it's going to happen, but I'm also not saying it is not going to happen. I'm just saying it is based on your risk appetite, if you want to renounce now or not. For me personally, it is a bit too far-fetched to renounce now. You don't need to renounce your citizenship at the moment in my eyes. So the back taxes would be the worst case scenario, which would just drain the liquidity of so many entrepreneurs, which would literally be crazy. But we've seen crazy things happening in the past few years from the government. So back taxes is just a peanut for them. If they really want to get as much money as possible from all of their wealthy citizens that leave, they will get it, believe me. And that is why processing times are something that you definitely need to consider, because all of those new dual citizenship options here take time. It takes a year to get a new citizenship, or maybe even longer in some jurisdictions. And until that time, obviously, we will get news. They will not implement the citizenship-based taxation next Monday, but it is possible. That's my main point. And this is why a plan B always makes sense, because getting a new citizenship takes time. And I think I've said enough now about this topic. If this is interesting for you, I definitely recommend you to get an individual consultation call. Just fill out our form at Tax.One and then also obviously subscribe to the channel. I will talk more about such topics in the upcoming videos. And if you subscribe, I will see you in the next video.